Hey everyone, welcome to our channel. In today's video, we're going to demystify a financial term that's often misunderstood, futures. Don't worry, this isn't the future tense from your exams, nor will we ask you to predict the weather. Today, we're talking about the kind of magic that allows you to lock in tomorrow's prices today, futures contracts. You might think that futures sound like a high-tech new invention, or at least a sophisticated investment tool, right? In fact, futures are closely tied to our everyday lives. Imagine if you could have booked this year's iPhone at last year's prices. Sounds like a win, doesn't it? That's the basic magic of futures trading. In today's video, we'll not only reveal how futures work, but we'll also explore why they are so important for farmers, miners, and even ordinary consumers like you and me. Don't worry, I promise not to confuse you with too much complex financial jargon. So, if you're ready to dive deep into the secrets of futures with me and learn how to seize opportunities in future markets, keep watching and don't forget to like and subscribe. All right, are you ready? Let's embark on this financial journey. All right, now that we've gotten off to a good start, let's dive deeper into what futures really are. First, we need to go back in history to see how futures came about. A futures contract, simply put, is an agreement to deliver a commodity or financial asset on a specific future date with the price set today. It's like booking a cruise cabin for next year at today's prices. The early bird gets the worm, and if you're late, you might end up paying more. Imagine you're a farmer who has grown a large amount of corn, but it's not yet harvested, and you're already worried about potential price drops. That's where futures come in handy. You can sell your corn in advance, and no matter the weather, at least the price is locked in. This is the fundamental function of futures, risk management. But don't think that only farmers use futures. Crude oil, gold, and even currencies can be traded via futures contracts. In fact, with futures, you can trade almost anything without actually owning the physical goods. It's like having boundless magical powers. So, futures are actually a super practical tool. They help buyers and sellers lock in prices, thus avoiding the uncertainty of future price fluctuations. Although it sounds great, it requires quite a bit of skill to manage effectively. Next, let's delve into how the futures market operates. Understanding its mechanisms can help us better navigate this complex yet fascinating financial world. Firstly, the futures market is essentially a centralized trading venue where all trades are standardized. This means that the type, quantity, quality, and delivery time of each traded commodity are strictly regulated. Whether it's at the Chicago Mercantile Exchange or the New York Mercantile Exchange, standardized contracts ensure the market's liquidity and efficiency. But you might ask, how are these futures contracts traded? Simply put, it's similar to the stock market, where traders can buy and sell futures contracts through brokers. However, unlike stocks, which directly represent ownership of a company, futures contracts are commitments to buy or sell a commodity at a future date, entailing both rights and obligations. In this market, participants are primarily divided into two categories: hedgers and speculators. Hedgers use futures to protect themselves from price fluctuations, like farmers or oil companies, who need stable cash flows to avoid the uncertainties that market volatility can bring to their businesses. On the other hand, speculators bet on the future prices of commodities, seeking profits through buying and selling futures contracts. A key aspect here is the price discovery function. The futures market provides a platform where buyers and sellers interact to form a consensus on the fair price of commodities. This process not only reflects current supply and demand, but also predicts future market trends. In summary, the workings of the futures market involve the trading of standardized contracts, the roles of different market participants, and the mechanism of price discovery. All these elements together create a dynamic and strategically significant market environment. For those of you eager to explore more financial knowledge, understanding the operation of the futures market is undoubtedly a crucial step. So, keep following our content to delve deeper into this exciting financial world. Now, let's talk about why people choose to trade futures and what this type of trading means for various market participants. Futures trading is not just a game for financial experts. it actually provides several key functions for our economy. First and foremost, futures trading offers a means of risk management, or hedging. Imagine you're a wheat farmer concerned about a potential price drop by the time you harvest. By selling your wheat at a fixed price on the futures market in advance, you can lock in a guaranteed income, thereby avoiding the risks of price fluctuations. This way, no matter how market prices fluctuate, your profits are secured. Next, futures trading also serves as a channel for speculation. Not everyone in the futures market is there to hedge risks. Many traders enter the market to capitalize on fluctuations in commodity prices to make a profit. The activities of these speculators increase the market's liquidity and depth, making it more efficient and also helping other market participants to enter and exit the market more easily. Additionally, the futures market plays a role in price discovery. Through futures trading, the market can more effectively reflect the supply and demand for commodities. Futures prices provide important market information to producers, consumers, and investors, helping them make more informed business and investment decisions. Lastly, don't underestimate the futures market's function as an economic indicator. Futures prices can often signal overall economic trends and upcoming market changes. For example, a rise in crude oil futures prices may indicate an increase in economic activity or supply constraints. In summary, trading futures provides tools for risk management, increases market liquidity, aids in price discovery, and serves as an economic indicator. These functions prove that the futures market is not only beneficial for individual traders, but is also essential for the entire economic system. Understanding these principles can help us better appreciate this complex but opportunity-filled financial tool. So, whether you are a newcomer to the market or a seasoned professional, mastering the knowledge of futures trading is incredibly valuable. Now, let's take a look at how to start trading futures. For beginners, entering the futures market might seem complex, but by following the right steps, you can get off to a smooth start. First, you need to choose a suitable brokerage firm. Futures trading is not conducted through traditional banks, but requires a futures broker. When selecting a broker, consider factors such as their trading fees, platform usability, customer service, and educational resources. After registering, you will need to open a trading account. This usually involves filling out some forms, verifying your identity, and discussing your investment experience and risk tolerance. This information will help the broker provide services suited to your needs. Next is funding your account. Futures trading typically requires a certain initial margin, which is to ensure that there are sufficient funds to cover losses should price changes result in a deficit. Then, you should familiarize yourself with basic trading strategies and market analysis techniques. Most brokers offer training courses, simulation trading software, and market research reports, which can help you get acquainted with the market before you start actual trading. Lastly, devise a clear trading plan. This should include your investment goals, risk management strategies, expected profit targets, and how you will assess market conditions. A good plan can help you maintain discipline and avoid emotional trading. Once you are prepared, you can begin your journey in futures trading. Remember, you might face some challenges initially, but continual learning and adaptation are key to successful trading. After discussing the theory of futures markets, let's look at some real cases to better understand how the futures market operates and how these trades can impact both the economy and individual investors. Case Study 1: Agricultural Hedging. In 2012, the Midwest of the United States experienced severe drought, causing corn and soybean prices to soar. A large farm utilized futures contracts to lock in the prices of corn for the harvest season ahead of time. When prices rose, they secured their income through the futures market, avoiding the risks of direct market sales. This not only ensured their profitability, but also stabilized their business plans, showcasing the role of futures in risk management within agricultural production. Case Study 2: Speculators' Success. In 2014, an experienced trader predicted that a global oversupply of crude oil would lead to falling oil prices. He heavily shorted crude oil futures contracts on the futures market. As oil prices indeed fell by more than 50% over several months, This trader made a substantial profit through futures contracts. This case demonstrates how the futures market can provide opportunities for speculators to profit from market volatility. Case Study 3: Corporate Risk Management. An international airline frequently used futures contracts to hedge against the uncertainty of fuel price fluctuations. When oil prices rose, they were able to purchase fuel at prices below the market rate through the futures contracts they had previously purchased, thereby controlling operating costs and protecting profits. This case emphasizes how futures can serve as an effective hedging tool in corporate financial management. Case Study 4: Price Discovery Function. The price discovery function of the futures market was particularly evident during the global financial crisis. In 2008, due to market concerns about an economic recession, gold futures prices rose sharply. Many investors and analysts use the price movements in the futures market to assess market sentiment and economic prospects. The rise in gold prices reflected an increased demand for safe assets beyond traditional financial assets. These cases illustrate that the futures market not only offers participants a variety of strategies, from risk hedging to speculative profit, but also highlights its irreplaceable role in the global financial system. Whether for individual investors or large corporations, understanding and utilizing the futures market is a key part of mastering modern financial tools. As we delve deeper into the futures market, I hope you now have a more comprehensive understanding of this complex yet opportunity-rich financial tool. From providing risk management tools for farmers and businesses to creating avenues for speculators to profit, the futures market demonstrates its multifaceted functions and importance within the global financial system. Through today's sharing, we've seen how futures serve as a powerful tool for predicting and hedging economic changes, not only helping market participants manage risks, but also promoting price stability and transparency. These characteristics make the futures market an indispensable part of the economic structure, offering high research and practical value for economists, financial analysts, and ordinary investors alike. Although our exploration concludes here, the journey of learning and practicing in the futures market is far from over. Remember, accumulating theoretical knowledge is just the first step. The real challenge and opportunities lie in applying this knowledge to actual trading. Whether you are a novice or an experienced participant in futures trading, continuous learning and practice are key to enhancing your trading skills and understanding of the market. Thank you for watching and supporting. If you found today's content helpful, don't forget to like, subscribe, and share it with more friends interested in futures. See you in our next video, where we'll continue to bring more exciting financial knowledge. Let's grow together, master the power of finance, and embark on a new journey of wealth growth.